What's up, guys? It's Cash Flow Cart. Back recording. Took a little bit of a break from actually recording. I still have videos coming out, but now I'm back. Just got a fresh cut today, so you know how that goes. Let's get into it. Today we have the February dividend portfolio review. Right now, the total account value is $53,703.78. That gives us an estimated annual income of $2,217.61. Monthly average is up to 184.80, almost 185. But short-term goal, I'd like to get this to 200, so 2,400 total. Today, we are going to go through the positions by market value, what I expect to make in February, and kind of just my general thoughts right now on some of these positions. Let's get into it. So, February, I have 3 paying me. Let's take a look at what those are. Realty Income, obviously, that's the monthly payer, will be paying me in February. Total estimated from this one is $661.77. So, divide that by 12. It'll pay me roughly $55 in February. Excited about that. And I've added like 1 or 2 shares of this in January, but, with how big this position is relative to the portfolio, I'm kind of holding off right now. And, I'll pick up more shares. I'll always pick up more shares of stocks I like, but I'm in no rush. On the 16th, we've got Apple. Should be paying me around $60 annually, so it'll be roughly a $15 payment in February. And then on the 23rd, we got Starbucks paying me, $35. Brings me to a total of $105 of estimated income in February. Pretty exciting, but as you can see, February, May, August, and then November, those are my lowest paying months, my lowest paying quarter. So now let's just get into the portfolio as a whole. My biggest position right now is Apple at $12,215. Last month when we checked in, Realty Income was the biggest position. Guys, I have not added any Apple, but it keeps just fighting for that number one spot. We've seen Apple and Microsoft, have a great 2024 year to date. They've both made all-time highs, if I'm not mistaken. I know the S&P and the NASDAQ have already made all-time highs this year, which is pretty crazy. But that one pays me $60 and change annually. Next up, we got Realty Income, $11,950 market value, pays me $661.62 annually. Obviously, again, that's the only monthly payer. So, those dividend payments are going to be this number roughly divided by 12. I do appreciate that monthly payer. I'm not one to like prioritize a payout schedule, but I will say with Realty Income, I do appreciate how uniform it is. It's like a paycheck on the 15th of the month, every single month. That's been pretty awesome. Just kind of a motivating factor, guys. Whatever works for you. Third, we got Altria Group, $10,120 market value, estimated annual income of $980. So, creeping up on that 1,000. I have added to this one. Okay, guys. I know I said that, I got to pay attention to what chunk of my income is coming from Altria. However, with that being said, for me personally, for my own risk tolerance, the risk reward with this one is just too high. Altria's got that long track record of dividends, almost at a 10% yield right now. And, valuation, it looks very attractive to me. So I went ahead, I took Altria to 250 shares. I think that number 250, it's a nice satisfying number. Hopefully that will kind of put me in a place where I can hold off on buying Altria for a while, but we'll see what happens. I am trying to focus more on a few of these other smaller positions, but I can't remember a day when I didn't want to buy Altria in recent times. So it's tough, guys. You got to watch out for like anytime you're super into an opportunity, but you've already built out the position. Don't get carried away buying. Obviously positions can make up a large percentage of your portfolio, but be careful if they make up too much of your estimated annual income. It comes a question of what is your own personal risk tolerance. Right now, I'm happy with Altria. We'll see. We'll see what I say next month. But as of now, I want to keep this 250. I want to stay here. I don't want to get carried away buying this one. Putting too much in one basket, I guess. Next up, we got Microsoft. Like I said, this one's been crushing it this year. I know they've hit all-time highs in 2024. Let's take a look at it. Oh my goodness, was the high today? The all-time high of $400.62 a share was, I guess it was yesterday on Monday. Yep, it was on Monday's open. Today is Tuesday, January 23rd, guys. So yeah, Microsoft just recently hit an all-time high, basically trading at that all-time high level. I'm currently not interested in adding, but I'm definitely not interested in selling either. This one is a free cash flow beast. It's a medium-sized position in my portfolio. I'm very happy with it. I think down the line, as Microsoft continues to grow, maybe they will eventually kind of shift from kind of that growth type of company more towards a hybrid growth value. It's crazy to me. Guys like these Apple and Microsoft, these are almost $3 trillion or $3 trillion valuations right now. And they're still like not even viewed as really value plays yet. So, I can't really say when Microsoft will kind of, more aggressively raise their dividend, but, we'll have to wait and see. I'm excited to be along for the ride. So, like I said, $7,930 in Microsoft, paying me $60 annually, very similar to Apple. Next up, we got Starbucks. Market value of $5,770, guys. I love Starbucks. I love being a shareholder. My cost basis on it is like $82 a share. And, it's kind of weird for me because everyone's talking about like, oh, Starbucks, is it a great opportunity right now? But in my own case, it's like buying Starbucks now means raising my cost basis. It means purchasing 10 points higher per share right now than my cost basis. So for me, I'm not as interested in adding to Starbucks right now. I've got the position built out, and if Starbucks does continue to fall, then I guess I will, revisit it. We can look at kind of a long-term pattern. I guess on the long term for Starbucks, I kind of see like a rough head and shoulders maybe forming. And, if it is able to break back down under 80 at some point, this year or next, I will be interested in beefing up this position. But right now, for me, for my own risk tolerance, I'm happy with this position. It pays me $141 annually. So that's great. Next up, we got Pfizer. I mean, I am a loser on this one. Not a loser in the sense that what am I saying? I'm a loser in the sense that it's trading well below my cost basis of $36 and change a share. Pfizer's at 28. I think this is a good example of, I saw value, but maybe I got a little bit trigger happy building this position. You can see I have 156 total shares. Right off the bat, really, I put on 35 shares at $36. I put on 31 shares at $39. I started building this position a little too aggressively for my taste, I guess. And, as a consequence of that, I'm kind of, I guess, letting up a little bit. I'm still trying to average down, but, I want this one to be a medium position, and it's already kind of at that status for my portfolio. So I guess I picked up a share today. I picked up Realty Income today too. A couple buys after the weekend. Can't beat that feeling. Let's move on. Like I said, Pfizer I'll nibble at, but I'm by no means aggressively buying. Next up, we move on to the small guys. T. Rowe Price, market value of $885.12. I need to build this position out. I'm kind of getting some FOMO. I'm kind of starting to feel like, oh, what if it kind of runs away on me? Which, I mean, it's not. My average price is $101. T Rowe's currently trading at 109. I like to build this position to the point where I have, 2.5 to 3K plus invested. It's just tough right now. I got to be really opportunistic with my capital. And, being in school full time right now, sometimes, some weeks or some months you're not able to contribute as much to when like you're working over the summer, for example, full time. You're able to put away a larger chunk of kind of your paycheck. But, I'm not going to, this is not a therapy sesh. I want to build out T Rowe more. We're going to get it done. Enough excuses. We're going to make it happen. Hopefully by March's update, this will be at least 10 to 12 shares. Hopefully, at least. I got to dial in on building it. And then Coke. Well, hold on. Rewind. T. Rowe Price pays me 39 annual income. Coke, estimated market value or total market value, $417. It's a small guy. Paying me $13 a share in annual income. This one's kind of a situation where I've started the position, but, I'm just in no rush to build it. I kind of tried to catch this dip a little bit in Coke. Didn't really execute perfectly. And, now I've got a small position. That's okay. Hopefully we see Coke, pull back in the near future. This one's been like trading in such a perfect trend for so many years. I would like to see some like real weakness in this one, but we'll have to wait and see, guys. With that being said, it's been a great month. Not a ton of additions, but been picking up shares of stuff here and there as I have the capital free, guys. I hope you guys are all doing well. Remembering to be opportunistic with your capital and try to get in the habit. I almost said hobbit. Try to get in the habit of investing money every month in your portfolio. Finding those opportunities that are going to work best for you. And, just keeping your conviction, guys. This game does work. It takes time, but, it's amazing. We have this amazing community to support each other and, compare each other's journeys, guys. It's awesome. If you're subscribed to the channel, thank you so much. The growth in 2024 has already exceeded my expectations, but, we're going to keep going up. Keep releasing great, consistent content. Thank you guys for tuning in. Everyone have a great rest of your day.